A groundbreaking merger is shaking up the mining world. Anglo American and Canada's Teck resources are joining forces to become a copper powerhouse known as Anglo Teck. But here's where it gets controversial. This isn't just a simple merger. It's being called a merger of equals, a term that often sparks debate about the true balance of power and benefits between the companies involved. Let's start with the big picture. On Tuesday, European stock markets edged slightly higher, with investors closely watching the political unrest unfolding in France. This comes after the unexpected removal of Prime Minister François Bayrou on Monday, a development that has added uncertainty to the region's economic outlook. The Pan-European Stoxx 600 index nudged up by 0.1% shortly after the market opened, while France's CAC 40 gained 0.2%, reflecting cautious optimism amid the political turbulence. Now, turning to the mining sector, London-listed Anglo American saw its shares surge by 5.8% following the announcement of its merger with Teck Resources, a major player listed in Frankfurt, whose shares skyrocketed by 21.7%. This deal will create one of the top 5 copper producers worldwide, a significant move given copper's critical role in the global transition to green energy and electric vehicles. The newly formed company, Anglo Teck, will be headquartered in Canada and is set to be listed on multiple major stock exchanges, including New York, Toronto, London, and Johannesburg. According to the terms of the agreement, Anglo American shareholders will hold approximately 62.4% ownership of the combined entity, while Teck shareholders will own the remaining 37.6%. This split raises an interesting question. Can this truly be called a merger of equals when one party holds a clear majority stake? In a joint statement, both companies emphasized the strategic benefits of the merger, highlighting how Anglo Teck will establish a global leader in critical minerals with a strong Canadian base. They believe this will enhance Canada's position on the world stage in the vital minerals sector, which is essential for technologies like batteries, renewable energy infrastructure, and electronics. Meanwhile, political developments in France continue to capture investor attention. Prime Minister Bayrou and his centrist minority government suffered a defeat in a confidence vote on Monday, largely due to opposition from both right and left-wing parties over the 2026 budget plans aimed at tackling France's significant budget deficit. This loss means President Emmanuel Macron now faces the challenge of appointing France's 5th prime minister in under 2 years. Most analysts expect Macron to select another centrist ally to lead a minority government, but the ongoing instability raises questions about the country's economic direction. Across the Asia-Pacific region, markets mostly climbed higher on Tuesday, reflecting a generally positive mood. In the United States, stock futures remained relatively flat overnight after the Nasdaq Composite hit a new record high on Monday, signaling investor confidence but also caution. Investors in the U.S. are gearing up for key inflation data releases this week, with the Producer Price Index, PPI, for August scheduled for Wednesday morning, followed by the Consumer Price Index, CPI, on Thursday. These reports are particularly important because they come on the heels of weaker-than-expected job growth figures released last Friday. That softer employment data has fueled hopes that the Federal Reserve might consider lowering benchmark interest rates at its upcoming policy meeting, a move that could have significant implications for markets and the broader economy. So what do you think? Is the Anglo-American Teck merger truly a merger of equals, or is one company clearly taking the lead? And with political instability in France and critical inflation data on the horizon in the U.S., how might these factors influence global markets in the coming weeks? Share your thoughts and join the conversation below. This is a story that's far from over.